How to earn money by investing in gold. Today we have a very interesting man with us as a guest. His name is Olivier Chédel. He is a Swiss asset manager based in Geneva, and for his clients he is investing in gold since many years. He's investing in gold. So gold was always part of his strategy and did very well. And now they are even increasing their gold position. And today we will learn how to make money with gold and why gold is that important. Stay tuned! My name is Enzo Caputo. I'm the international Swiss private banking lawyer, the owner of the boutique law firm Caputo & Partners, and the owner of the blog SwissBankingLawyers.com. This is the place where successful international business people find tips and solutions to better protect their assets with Swiss banks and pay less taxes. Stay with us.
We fight for your money.
Good morning, Olivier. It's a great pleasure to have you here as a gold expert in my show and to give a lot of information to our audience, to disclose the secrets about investing in gold and the secrets about how to make money with gold. So how to earn money by investing in gold is a very interesting topic, and it's even more interesting now in this difficult situation, in this COVID-19 situation. So why are you increasing the gold positions for your clients? Why you are doing that? What is the background?
First, thank you for having me and giving me the opportunity to say a few things on this interesting market. It is true, we have been investing in gold for many years. To a larger or to a smaller extent, it depends, of course, in which kind of economic environment you are situating yourself. Right now, we're rather increasing gold, and actually quite substantially. And when I say gold, actually I should say precious metals, but for easiness sake, we just say gold. Okay. I think we are in a situation right now where a combination of critical situations are colliding. We have global indebtedness, which is at its absolute height.
Historical never before money printing.
Countries have issued so much debt and they get even more indebted to a situation which is not sustainable long term.
Somebody has to pay the bill at the end of the day.
Absolutely.
Somebody has to pay.
Absolutely. And this COVID pandemic, of course, has not helped this trend. On the contrary, actually, the indebtedness has increased because countries had to support their citizens, which have been hurt by the pandemic. And so this year, indebtedness has increased dramatically.
And gold is a hedge against...
It is a hedge. Yeah. It has always been a hedge. You have to see, gold is for me a currency. Yeah. Gold is not a material which is just in the ground and has no interest. No, it is a currency. You have to see it like this.
It's a currency. It's a currency.
And to the same extent that the Swiss franc is a currency and has done extremely well in the last, 50, 60, 70 years, because it is a safe haven, or the reflection of a safe haven jurisdiction. Yeah. Gold is the reflection of something which is not controlled by countries. It is something which the public understands, and for the last, 4,000 years, 5,000 years, all civilizations have used gold in a manner or the other to hedge themselves against difficult times.
Difficult times, very interesting. So for an investor, how should he invest in gold? If he wants to participate in the potential of gold, not only as a hedging, but also to make money out of it, what are the different ways to invest in gold, and what are the most, how do you differentiate these ways?
Good question. First of all, the gold market is not a very big market compared to the
Forex market
or the Forex market, even bigger. The bond market, it is a very small, limited market because, and that's why gold is sought after, it exists only in very limited quantities. And it's very difficult and time-consuming and costly to take it out from
To extract the gold, to
Exactly.
extract the gold from the ground, yeah.
Absolutely. Now, how can you invest in gold? Traditionally, I would say people bought gold coins. The gold coins, the most widely known are the Krugerrand from South Africa, Maple Leaf from Canada, the Eagles from America.
They are very liquid.
The Frenely,
Yeah.
very liquid.
Very liquid.
You know what you have. You can take them with you. You can store them easily.
You're right. I also do so. I have a collection of Roman gold coins.
Absolutely.
2,000 years from. I like it very much. Yeah.
The problem is not all gold coins have the exact amount of gold which makes the weight of the gold.
So you have to watch out. How much is the percentage of gold
Absolutely.
in the coin?
For example, the Napoleon in France or the Frenely in Switzerland has a little bit less gold than what the coin is weighing. However, if you know that, you pay at the end just what the gold reflects. All right? But this is a good way of investing. The second way is to buy gold bars. Now, gold bars is perfect to keep in a safe deposit box. You can have it on a bank account also. It shows there. You have gold bars of 10 grams, 100 grams, 500 grams.
The biggest is
12 and a half kilos. Absolutely. But that is a little bit expensive because 1 kilo bar, which is has about this size, 1 kilo is nearly $60,000. So can imagine 12 and a half kilos is maybe not for the general public to buy.
Yeah.
However, it is also liquid. It is refined with a stamp. So if you have the guarantee of this stamp that this is of good provenance and it's pure gold, then it is easy to sell it.
Switzerland is the most important gold market in the world, correct?
Yes, it has been and it still is, absolutely. First of all, there is no VAT on gold, so you don't
very
pay.
Interesting.
Very
VAT,
important.
Zero VAT on gold. In silver there is VAT.
Yeah, and we have about, I think, 4 or 5 refineries, world-class refineries in Switzerland. So a lot of gold pours into Switzerland, is refined, put into gold bars, and then sold to the public or to banks, to whoever wants to hedge themselves.
Very important is if you have gold bars, then jurisdiction is very important. In which jurisdiction you want to store these gold bars. So you have to select very stable jurisdiction to store your gold bars, and you should not you should not hold your gold bars in the jurisdiction where you live, where is your residence. You should have your gold bar out of the influence of the jurisdiction, for example, in Switzerland. So that's why in Switzerland there is so much gold. But there are also other ways to invest in gold. I know that you are an expert of gold stocks, stocks of gold mines in Canada, in Australia, in New Guinea, in Africa. Can you, especially in Africa, you're an African expert, an expert for Africa.
I'll talk a little bit about this. I might just add one thing. Okay. If you don't want to buy gold bars, because you have to hoard them and the costs are involved, you can buy an ETF. ETFs are exchange traded funds. It's traded in New York, it's traded in Switzerland, and you have ETFs which reflect exactly the amount of gold which is in each unit.
Yeah.
At the end, you hold paper.
But it's safe. You have paper, exactly.
You have a paper. You have to be sure that the issuer of the paper has the gold physically in storage.
So you have to be sure, you have to verify. Otherwise, absolutely, it's not a good investment in ETF. So before buying this, you're saying that before buying ETFs, you have to verify if the gold is physically present. So very important information. So if you buy ETF, check first if the gold is physically there.
Right. Now, if you own gold, be it gold bars or an ETF, your performance will always be as much as the gold price goes up or goes down.
Capital gain. You are realizing
it's capital gain, so you make money, loss, but you will never make more than what the gold price will do. Yeah. You have to be aware of this. Now, this is very good as a core holding in a portfolio.
But you made a nice example before. You compared the stock market price with the gold price.
Yes, actually the gold price, if you look back since 2008, gold has done as well as the Dow Jones Index.
So you see how you make money in gold? So the same as the Dow Jones Index.
It had some difficult years, that is quite clear. But the stock market always has also difficult years and sometimes very brutal corrections. That is inherent in any commodity. In anything, big stocks or copper or gold or silver, whatever, you have price swings. What we try to do is take advantage of what we expect will be the next price swings. We are quite clearly right now in a long-term upcycle in precious metals, right?
A long-term upcycle.
Yes, with of course ups and downs, but the long-term, I see it up. I see gold price much higher. So how can you profit more than just by buying physical gold? Yeah. You could actually buy stocks from gold miners. Yeah. Gold producers.
But you have to be very careful because there are stocks and stocks. I know this is a risky area.
Absolutely. You have to, first of all, you have to see you have only a few very big names in this business.
So the big players, Newmont,
Barrick, these are the two mastodons. These are extremely stable, old companies. They have huge operations, very good cash flow, and they add to their reserves not by exploring themselves necessarily, but buying up smaller companies. So if you want to be on the safe side, buy Newmont or Barrick,
the big companies, like yes. And if you want to make more money?
Well, in an upcycle, very quickly, people then, investors, switch to the mid-range gold stocks.
Like?
Yamana. Yeah. Yamana, they have mines in Brazil, but it's a Canadian company. Yeah. Agnico Eagle, they have mines all over the place, is diversified, is a very, very strong company, has been a great investment. Goldcorp has been one of the darlings in the last 20 years. Yeah. Kirkland Gold. What is important is, this is my personal view, you should buy companies which are listed in secure, in renowned countries. Canada, Australia, the United States, these are the three countries with the best markets. And it's not by coincidence that in Canada, for example, you have an incredible amount of companies either producing or exploring which are there. That doesn't mean that they mine, that their mines are in Canada. Some, of course, are. They have the Red Lake district or the Cummins belt or so are fantastic areas for gold and over 100 years. However, you have gold in Ghana, you have gold in South Africa, you have gold in New Guinea, in China, in Serbia, in Mexico.
Even in Switzerland there is gold. Even in Switzerland.
Yeah, probably not economically.
Yeah.
So, if you want to make more money, as you said, go into the intermediate range because you have a little bit more leverage. Yeah. Or even if you want to speculate a little bit more, you can add one or two companies which have not yet a mine, but which have been drilling to look for gold and have hit
a good place, a hotspot.
A hotspot. Yeah. Of course, you have to develop a mine, and developing a mine takes anywhere between 6 and 10 years, and it takes a couple of $1 billion. So the big boys like Newmont, Barrick, they are very keen in buying the smaller ones out, which have been successful in exploration. Yeah. So imagine you invest into a stock which you paid maybe 50 cents.
An exploration company.
Exactly, an exploration company. The results are good, and over the year, the stock has gone up to $2 or $2.50. This is still very, very low, but you might not want to wait, and you don't think that this company has the power and the knowledge to develop its mines. They will probably sell the company. So when it's sold to one of the big players, then you cash in.
Then you make money. Then you make money.
Then your leverage, of course, is incredible. A good example, it has not been sold, but a good example is Kirkland Lake. Is a fantastic company with a big operation in Canada. I remember when the stock was below $2 Canadian dollars, and now it's about $70.
$70.
So
wow.
just
from $2 to 70. Wow.
Absolutely, and this in not much more than 3 or 4 years.
Wow.
So you can be very lucky. Now you said be careful. Yes, you have a lot of companies, especially in an upcycle, they say we have great claims and we operate in
Africa,
in strange places. But you have political risk. If you have your mine in an unstable country or in a country where you have a political unrest or wars or for any other reasons, you don't have the rule of law. For example, in a country in East Africa, not long ago, about a year ago, the government just changed the rules and say from now on, we increase the royalties owed to us by 100 or 200%. So a gold miner will be very wary to invest its money in a jurisdiction which is not foreseeable and where you have these kind of risks.
These kind of surprises.
So
yes.
even if it's a Canadian or an Australian company, have a look where the mines are, and if they mine in Africa or Latin America, it's better to have a kind of a diversification.
So check out very important information. So if you invest in such company, you should also check where are the mines, in which countries. Are these places diversified if they have risky countries like New Guinea, like Africa, like South America, and all these difficult countries? If the mines are diversified, your risks are diversified. So the diversification is everything.
And you have companies like Equinox Gold. They are in about 6 or 7 different places all around the world, which is great. So you have a diversification. If it goes wrong in Argentina, well, it might be compensated by Brazil or by Mexico or by an African mine. If you have another one which is only mining in one single jurisdiction, you have obviously more risk.
You have a cluster risk.
Absolutely.
So, and do you know other ways how to make money in gold? So we have we discussed physical gold in bars, physical gold in coins, ETFs. We discussed stocks of big companies, medium companies, and even small companies who do exploration. There are other ways to make money with gold? There are gold options, or what do you?
Well, you can buy options. Why not? I mean, was one of the first market actually which opened to the options, the gold and silver options. It is liquid. You do that because you anticipate short term, 3 months, 4 months, 5 months, higher gold price, or you anticipate a lower gold price and then you sell an option, or you buy a put option, depending a little bit. But I think this is not for the general public. I think these are for professionals, and you have to follow that very, very closely. I would rather say somebody who would like to make a little bit of money without too much risk, he should probably look at gold royalty companies.
Gold royalty.
These royalty companies, they don't do exploration. They don't do they don't take the gold out of the soil, so they do not do the extraction work. What they do is they have been acquiring properties where they knew that there was something there. They do the more drill holes, they do the feasibility studies, and then they sell the project to one of the big boys.
So the rights.
And instead of getting just the cash, they keep some royalties,
very interesting, very interesting.
These big companies pay these royalty companies a certain amount every quarter, every year, and the higher the gold goes, the more you get. So these gold royalty companies are a relatively secure way of always having some cash flow, being in the gold market without having the risk of pure exploration or extraction with all the costs involved. Franco-Nevada is probably the biggest name in this industry, but there are others in Canada. Seabridge is one, Osisko, and so on. So you have about
royalties. These companies
dozen.
controlling royalties.
Yeah.
So it's a way to invest with less risks. What do you know other ways, or what can we?
The thing is, we talked about gold. You could include silver. Yeah. I think silver is interesting because it's a metal which is used in the economy for smartphones, for cars, for a lot of applications, photography, and so on. Gold, not, but silver, yes, it's an industrial metal.
Is silver a currency or is silver not a currency? Gold is a currency, you said. Silver.
It is a little bit debatable. It is much less a currency. I would say it has some characteristics, but it is not a pure. And you have to see there's much more silver around in the world than gold. So it makes it also less sought after. But it's interesting to invest there. Very often when you have, and I forgot to say, a lot of gold companies, so-called gold companies in Canada or Australia, they are not pure gold companies. They have copper gold mines, or they have to separate gold and molybdenum or another rare earth metal or whatever, or zinc. So in their factories, in their crushers, they can divide obviously all this. So you can get an exposure to copper, and I think copper might be a very good investment.
Alternative, copper as a commodity.
As a commodity, because especially now that you think that Mr. Biden might actually launch a kind of an infrastructure program in America, one of the commodities used is copper for upgrading all of the wires across America, along the highways, along the bridges. You need copper in a lot of applications. You need steel. I mean, look at the commodity market as a whole, and specifically gold as a hedge.
Okay, thank you very much. Thank you very much for giving all this interesting information. If you like more information just like this, subscribe to our YouTube channel. Click the subscribe button and be with us. Ring also the bell. Don't forget to ring the bell. If you do so, you will never miss our new videos. Thank you very much for being with us today. Bye-bye. Be rich and stay rich. Have a nice day.